Hey guys, so great news. FHA just made a major change on their MIP, mortgage insurance premium. This is the one that comes monthly, right? So some people call it MIP, some people call it PMI. FHA's version is technically called MIP, or mortgage insurance premium. This is a monthly amount that you pay every single month if you have an FHA loan, right? So about 10, 15 years back, FHA made some changes, and then they made some minor changes ever since. And it seemed like the trend was that they were getting worse. So it actually was getting worse over time. Those premiums were kind of creeping up. They basically were stuck on there for the life of the loan, which used to, they could actually come off. But that actually was not the case at one point. They started where it was a permanent situation, right? Anyhow, so they made some changes. What do the changes look like, and what does it mean for you? So if you've been considering getting an FHA loan, so starting on March 20th, that is starting on March 20th. So any loans that are closed on March 20th or later, they're going to abide by this new amount. So previously, the amount was 85 basis points. And I know you're saying to yourself, basis points, what the heck is that? So it was 85, so 0.85% of the loan total divided was how much monthly amount that was. That actually got reduced by roughly 35%. So it went down to 50 basis points. Okay, so that's a pretty big savings for people who, you know, we're expecting to pay the higher amount. So that's a good thing. We like that, right? The other thing that's really nice is if you borrowed less than 95% of the house price, so if you borrowed less than 95%, then you actually will be able to have that amount come off at some point. So previously, it was just forever. Like, you just got to pay it. Congratulations. That was just how that went. But now it actually is going to come back off at some point. So that depends a little bit on the amount that you actually put down. So just so you can clarify, it's actually 41% savings if you go ahead and you are borrowing less than 95% of that purchase price, okay? So it's kind of important to notate. So if it's less than 95%, right? So if you're putting 5+% down, it's actually like a 41% savings off of that monthly amount, right? If you are using traditionally what most people do, which is only put like the 3.5% down, if that's what you're doing, then it is 35% savings. Either way, you're still getting a good chunk of savings right there, which is awesome. It means that you're gonna be able to afford more house, which is also awesome. So the other thing that you should notate is like I said, if you put 10% or more down, then in that particular case, you actually are not going to pay that mortgage insurance over the life of the loan. You're only going to pay for it for 10 years. 10 years is still a substantial amount of time. You probably would have paid it down quite substantially to that like kind of 78% mark before then. However, the good news is that at least it is going to come off. Before, that just didn't happen. It was what it was. You got to pay it forever. Congratulations. Unless you wanted to refinance, sell the house, or something of that sort, right? So the good news is that we are getting some relief. Let me see if I can give you some rough numbers just to kind of give you an idea. I'm gonna go ahead and pull my phone, and so we're gonna do the numbers. So let's pretend for a second that you bought a $400,000 house, okay? And let's say that you put 3.5% down, which would mean that you would have a loan amount of $386,000, right? And under the old rules, your mortgage insurance would be $3,281 a year, or in a monthly amount, $273 a month, okay? Now, under the exact same scenario, again, you're still borrowing $386,000. That has not changed. But your new amount would be $2,123, or $176 per month. So that's a pretty substantial savings. I'll take that, right? Any amount of money that we're not having to pay is always a good thing. So that's the update currently on FHA. It's gonna save you some money, and that's great news. You can always reach out to us, and we're gonna go ahead and tell you exactly what you qualify for and give you some more details on your specific situation, but that'll kind of give you that little bit of information there. Go ahead and click the subscribe button so you can get great more tips and videos just like this one.